Nouriel, here in Davos, obviously a major focus is on financial reform of banking institutions around the world. You say the risk is not over-regulation, it's under-regulation. Why is that? Many bankers here would completely disagree with you.
I feel they were back to business as usual in the financial system among banks. They're taking risks, they're increasing leverage, lots of prop trading, obscene bonuses, compensation has not been changed, you have zero interest rates, you have quantitative easing, you have regulatory forbearance, and now there is a beginning of asset bubbles in the U.S. and around the world. So we need to try to curb the excess in the financial system.
So because of under-regulation, we have the beginnings of new asset bubbles, so the future risk of a double dip, in your opinion?
Well, eventually, if we have these dollar-funded carry trades are leading to asset bubbles with easy money and credit in Asia, in China, around the world, that could, over time, not this year, to lead to excesses that are going to lead then to a financial crash and then to a double dip. I don't think there's a risk this year, but we're not really dealing with excesses of the financial system. That's why the kind of proposals that Obama has made are going at least in the right direction.
The announcement made by President Obama and Paul Volcker last week, essentially reinstating a lesser form of Glass-Steagall. You not only agree with it, you think it doesn't go far enough.
Yes, I think that with too big to fail or to be too interconnected to fail banks, you need to really break them up, not just to limit their size. I think that they're going in the right direction by imposing that banks cannot have prop trading activity, but I would separate commercial banking from underwriting of securities. I'll go back all the way to the formal Glass-Steagall.
Looking at sovereign risk around the world, you talk about certain countries, you've written about this, that you say need to get their fiscal houses in order. I'd assume you're talking about the United States as we carry more and more debt. What other countries are you referring to?
The concerns by investors about sovereign risk are emerging throughout advanced economies. Is Greece, is Ireland, is Iceland, is Spain, is Portugal, is Italy, is the United Kingdom, and eventually the bond market vigilantes are going to wake up even in the United States and Japan, given that the current path of fiscal policy is obviously unsustainable in the U.S. and in most advanced economies.
Is this a problem of too loose monetary policy?
It's a combination of too loose fiscal policy and to lose monetary policy as well. With large budget deficits now that are being monetized by central banks by printing money, and eventually the combination of that is dangerous, could lead to either a fiscal train wreck or an increase in expected actual inflation down the line.
The U.S. stimulus, now over $800 billion. Most Americans don't see a change. Many corporations say they're not hiring more as a result. Your opinion, is stimulus working in the U.S.?
Well, we needed it because if we had not done the stimulus, the recession would have become even severe. We risk a near depression. But I think they have a combination of a need for fiscal stimulus in the short run and maintain it, and at the same time having policy credibility in terms of fiscal consolidation of the medium term by having a schedule of increases in revenues and reduction in spending, so that the short-term stimulus is not going to lead to a loss of fiscal sustainability over time.
Do we need more stimulus? Do we need more money pumped into the U.S. economy?
At the margin, yes, we need to help the unemployed. We need to try to stimulate jobs. We might need to help state and local government. So in the short run, we might need more stimulus, but that has to be accompanied at the same time by credible commitment to reduce the deficit over the medium term.
Your outlook on commodities, Nouriel, you've talked about oil not approaching 100 anytime soon, and you've talked about gold being the next bubble. Explain.
Well, this wall of liquidity is chasing assets, and some of those assets are all energy, food prices, commodity prices, even gold, and they've been rising very sharply. Of course, the global economic recovery will lead to an increase in those prices, but in some of those increasing prices are excessive. Oil has gone from $30 towards $80 a barrel at the time when demand is down to 2005 level, and there is a huge inventory of excess oil. So I think that part of the increase in oil and commodity prices is a bubble rather than fundamental, and it's risky because if oil and energy prices were to rise further, then eventually that's going to be a negative for all importing countries.
And every single executive I've spoken with here so far in Davos is quite bullish on China. You've spent a lot of time in China. Do we risk more bubbles in China, say housing?
Well, in the short run, China has really re-stimulated the economy. They're growing close to 10%. But I think that you have the beginning of asset bubbles in China, in real estate, in the equity markets, in commodity because of their stockpiling. And part of what they've done is by do more capex spending, more fixed investment, and increasing capacity at the time when there is already a glut of capacity in heavy industry, in real estate, in construction activity.
So you're
over
concerned
time,
about China?
Yeah, I think that in the short run, China's going to do well, but unless they change their model of growth from relying on exports and capex spending to produce more exportable to having reduction in savings and increasing private consumption, eventually even China could get in trouble.
Even China could get in trouble. We'll leave it there. Appreciate your time, Nouriel Roubini. Thank you.
Pleasure being with you today.